Hey, what's up guys? John here. Many would say that we are at the top of the market. A lot of people are anticipating a housing correction. We're seeing 20% of all home sellers reducing their home prices. We're seeing interest rates rise. This inflationary beast get out of control. We're seeing a lot of concern across home builder confidence. And I personally think that it's much more likely that we see a decline in home valuations rather than a further ascendance of these crazy valuations we're seeing now. I believe that it's much more likely that this is probably a worse time to buy a home and probably a better time to sell one, at least for most people in most markets. However, there's some big changes coming to the housing market that I think could put a short-term pump in the market to where people get excited. However, I think that this could be a real problem for a lot of people. And this problem is offering $200,000 as down payment money at 0% interest, such as what they're doing in Washington, D.C. In Los Angeles and in California, they're offering very similar programs. New California home buyers could get a government cash for down payment up to 20% in Los Angeles. However, the smart money, Blackstone, when I say the smart money, they're the deep pockets. They're the ones that control 100,000 plus houses through their subsidiaries, such as Invitation Homes, which owns about 80,000 properties that started during the Great Crash in 2008 and 2009. They just purchased Home Partners of America. They own 17,000 single-family homes. They purchased them about a year ago for $6 billion. Now they're all pulling out of the market. And you ask yourself, why would they pull out of the market if their job that they've done so well, which is making tons of money, is to do that? It's probably because they think that the market's going to cool down in a pretty big way. At least that's what the headlines read, that they're halting home purchases across the board in 80 markets. They're only going to stay active in 20 markets. And so this loan product that Bank of America is pushing right now, which is 0% down payments, no credit checks, and they're basically just issuing the free money. And they're saying that the reason that they're doing this is to level the playing field and give access to home ownership to everybody rather than just a certain group of people, right? They're saying that this is the best thing for everybody. However, when you buy a property, you are buying a property with negative 6% equity. And why would that be? Even if you put 20% down, you really only have 14% equity in that property if you paid fair market value. And the reason being is the cost of sale, transfer taxes, realtor fees, there's cost involved. However, when you give someone a free property, meaning they come out of pocket zero, no closing cost, nothing, and they're buying this property at all-time highs, could put people in a really bad situation if they do need to sell that property and the market does not continue to ascend. Here's what's going on. I think this could be a big problem for a lot of people. I'm sure maybe some people will win long-term, but I think that there could be a lot of people that really end up getting a bad deal. Imagine getting approved for a mortgage of your dream house without having to make a down payment, pay closing costs, or have a certain credit score. Now, having a credit score, a good credit score, is important. And it's important because for a lender, they can gauge the amount of risk that they're going to take on by doing business with you in many cases. Now, how would this be? Could they can track your history of making payments to people or institutions or companies in which you borrow money from? The more responsible you are, the less of a risk that they take with doing business with you, and the more checkered your history is with lending, with receiving money and actually paying that money back, the more risk there is involved, meaning the higher rates and the higher costs associated with doing business with you. They have to build out a buffer, right? In the event that you do exactly what happened in the past to them, they need to be able to make sure that they're going to make a decent chunk of money off you with that risk that they're taking. However, when there's no down payment and there's no closing cost, and people right now are paying $2,100 for the median apartment in America, that would be similar to buying a $450,000 house. Why rent an apartment for $2,100 when you could own a property for $400,000 and come out of pocket zero? Well, there are costs involved with owning a house. Insurance costs are rising. The cost to fix properties is rising. Inflation is getting out of control. And this could be a problem in which a lot of people are not anticipating over the course of home ownership over a year or two. That could become a reality for borrowers in 21 cities after Bank of America announces a new mortgage plan that aims to close the racial homeownership gap by offering eligible first-time buyers of all races affordable home loans. The Community Affordable Loan Solution will be available in appointed markets, including these neighborhoods located in Charlotte, Dallas, Detroit, LA, Miami. The solution requires no mortgage insurance or minimum credit score and instead uses credit guidelines based on factors like rent, utility, phone, and insurance payments to qualify borrowers, and they must take a course. So instead of showing credit or instead of having money up front, you have to take a course, and that course, I'm sure, is going to lay out all of the responsibilities of homeownership and lay out certain disclosures to make sure people are ready for homeownership. Homeownership strengthens our communities, and we can help individuals and families to build wealth over time. Now, the time to do something like this, offer some type of loan assistance or to try to get people into properties, probably would have been at a moment when the market's ascending, not when the market is starting to come down, because you'd want people to build equity. Now, equity is the difference between how much you owe on the property versus the property's market value. So if you buy a property for $100,000, the property goes down to $80,000, it means you have negative 20% equity, or cost of sale, negative 26% equity. Now, if this market is more likely to do that, then that could put people in a very bad situation, right? But if the market's ascending and they buy it for $100,000, the market's going up and up and up, then it could be a win-win situation for both the city that's going to benefit tax-wise from property tax revenue, the property owner, because they're seeing newfound equity in their property, and for the city, for the people inside of the community, right? And so this could be a unique situation where there is very little equity that's going to be built over time, at least in the short term. Maybe over the next 10, 15, 20 years, sure. But in the short term, we could see a problem. Head of Neighborhood and Community Lending for Bank of America said in a statement to the press, our Community Affordable Loan Solution will help make the dream of sustained homeownership attainable for more Black and Hispanic families. The Community Affordable Loan Solution is a measure of Equal Credit Opportunity Act passed in 1974 by Congress to prohibit discrimination in the lending process. However, since 2017, the homeownership rate for Black Americans has been nearly 30 percentage points lower than that of white Americans. Although the U.S. homeownership rate soared in 2020, data showed the gap is widening. Well, the gap is widening because we are stepping into this affordability crisis, and private equity firms, a lot of deep pocket investors are running out there buying up a lot of the housing stock. So of course the gap isn't widening just for a certain group, it's widening for the entire country. The middle class is getting eroded before our eyes right now. And these types of situations in which the smart money is sitting on the sidelines and everyone else is running out there buying properties is something we all need to pay attention to. According to the National Association of Realtors, the U.S. homeownership rate now stands at 65%. However, the rate for Black Americans lags significantly behind at 43%. For white Americans, the rate is 72%, and Hispanic and Asian Americans rates above 50%. As inflation interest rates hike increases, the cost of homeownership, housing affordability in the U.S. has fallen to a 33-year low. So we are at all-time highs and rates are rising. What does it mean when interest rates are rising? When interest rates are rising, it means the cost to borrow money gets more expensive. And when the cost to borrow money gets more expensive, everyday Americans' debt-to-income ratio is reflective of what they can actually afford to buy in properties. And what ultimately happens is home sellers end up dropping their prices and home buyers end up getting a lower price because of the higher interest rate associated. Same is going to be reflective in commercial real estate. However, the deep pocket investors love this because for them, they have so much money, they're just going to run out there and all they care about is how much they're actually paying for the property. For many Americans, especially Black borrowers who earn less than the U.S. median income, home ownership has grown further out of reach. As the gap in homeownership rates for Black and white Americans has widened, it is important to understand the unique challenges that minority homebuyers face. She says housing affordability and low inventory has made it even more challenging for buyers to enter into home ownership, but even more so for Black Americans. Now, for me, when I bought my first property, it was very hard for me to save up the money. I think that was actually a really good thing for me specifically, because I would have ran out there and bought the wrong type of deal. But because it took me so long to save up the money, the entire time I was saving up the money, I was studying the markets where I wanted to buy, what a good deal would be, what would be the ideal type of scenario, the ideal, plan for me. And during that whole time, I was kind of studying and doing my research, and I was getting my spending habits and getting my savings in line so that I can go out there and make a smart investment, right? And that worked well for me. right? Putting my emotion on the sidelines and just really paying attention to what my real goal was. What was the property going to do? What was the benefit of buying this property? And I think that when you have that type of wedge between you and making that decision, it really does, for me anyway, put me in a place where I make a smarter decision that benefits me long term rather than, an emotional decision that maybe later I regret. A study conducted by Mortgage Market Lending Tree found that while mortgages are denied for people of all races, the share of Black home buyers who have had their mortgage request denied is notably higher than the share of overall population. According to the company, the denial rate for Black borrowers is double the denial rate for overall borrower population. Because lenders use credit scores to help figure out how likely a borrower will be to repay what they owe, those with lower credit scores generally have a harder time getting approved for a mortgage. Jacob Chanel, the senior economist at Lending Tree, told Insider Black Americans unfortunately tend to have lower scores than members of other racial groups do, which means they often have a harder time getting approved for a mortgage. In recent years, Americans and housing experts have called for different alternatives to credit scoring in the mortgage lending process, as historical economic racism often puts people of color at a disadvantage. Bank of America plans to ditch credit scores and instead focus on rental and auto payments could improve approval ratings for BIPOC and ultimately give them a better shot at the American dream of home ownership. Now, I'm curious, do you think that this is a good situation long term? I'm sure short term, people will be excited to get out of an expensive apartment in which they're spending all their money and building no equity in, to buying a property in which they'll have tax write-offs and they could potentially build long-term equity. Or do you think that we could see a flood of people enter the market and buy properties, maybe pay too much money for a property and be on the hook for a property that ends up becoming a problem? I'm curious as to what do you think about this? Where do you see this going? What are your thoughts on the entire real estate market? And do you think that this is going to be something that, we look back on like 2008, where in 2008 people were just getting loans, no doc loans. People would just state their income and everyone was just getting free money. But then we saw how that played out a year, 2 years later. Drop your comments below. Let's have a conversation about this. Subscribe here. Subscribe also to my second channel. I just filmed my first video today. It's going to be released tomorrow on that channel. Down below, podcast, The Two Guys Take on Real Estate from TikTok. And also LinkedIn, Twitter, Instagram, and TikTok up in the banner. And I'll catch you guys in the next video. If you need help fixing your credit score, maybe your credit score is holding you back, visit cashnow.video. If you want to learn about real estate investing, how to invest in your first deal, cashnow.video. And if you want to get on the YouTube grind with me, cashnow.video. I'd love to work with you, love to help you, and I'd love to get to know you. All right, guys, catch you in the next one.